Hey everyone, welcome back to Corporate Decoder. Today we're diving into Mercer Bancorp's latest filing, and let me tell you, it's a real page turner. If you're into small town banking drama, it's a Form 10Q report, basically their quarterly financial health checkup, and it does not look that healthy before we start. If you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Come join the discussion. Okay, first off, this is a quarterly report for the period ending March 31, 2025. So it's a snapshot of their financial situation. Mercer Bancorp is based in Salina, Ohio, and they are a smaller reporting company. They are also considered an emerging growth company. They are about 1 million shares of common stock outstanding as of May 14, 2025. Alright, let's dive into the numbers, and by numbers I mean financial tables. I'm going to decode the most important numbers for you. Dots of their total assets are sitting at about $181.9 million as of March 31, 2025. A slight dip from 105, a slight dip from $18.1. See where things moved. Cash and cash equivalents, that is the actual liquid money they have to operate, is at $6.7 million, up from $5.9 million last September. Seems like they have a little more breathing room. Available for sale securities decreased a bit from $11.1 million to $9.8 million. Think of these as investments they could quickly sell if needed. It's also worth noting their loans receivable, that is the total amount of money people owe them, which is sitting at $145.4 million, meaning they anticipate some people will not pay back their loans. Let me repeat that, almost $1 million is not expected to come back. This is not good news. Flipping over to liabilities, their deposits are a key number to watch. Total deposits increased to $1,038.8 million compared to $134.6 million last September. That's good. It means customers are trusting them with their money. They owe $17 million to the Federal Home Loan Bank, which is how banks borrow money, down from $22 million, and are decreasing this borrowing. Shareholders' equity is at $23.9 million, a slight decrease from $24 million. Equity is the total assets minus liabilities, so it shows the actual ownership value of the company. Moving on to the income statement, let's see how Mercer is performing as a business. Our total interest income is up to $243 million for the quarter, compared to $1.9 million last year. Great, they are making more from loans, investments, and deposits. But hold on, their interest expense is also up to $658,000 from $578,000 last year. So they are paying more to get that money. What matters is what you keep after expenses. Net interest income, what's left after interest expenses, comes to $1.6 million, up from $1.4 million. So they are making progress. Now, this is where it gets interesting. There is a provision for potential credit losses of $28,000 this quarter. This is what they set aside, anticipating people will fail to pay back. They did not anticipate any losses last year for the same period. Interesting. After setting aside for potential losses, their net interest income comes to $1.6 million, still up from $1.4 million, but not as high as it would be if they did not need to set aside money for credit losses. Their non-interest income is $143,000, down from $153,000. Those are fees and other income that is not necessarily tied to interest. Total non-interest expense, things like salaries and other office-related stuff, came to $1.7 million, $7 million last year, so they are spending more money on operations. All this comes to an income before income taxes of $43,000, down from $165,000. The final net income is just $35,000 compared to $129,000 the previous year. Yikes. Finally, the earnings per share, basically the profit per share is only $0.04 compared to $0 an investor in Mercer. Moving to the statement of comprehensive income, it's really important for publicly traded companies, and it shows the full scope of their financial reality. It starts with the net income just like before. Then it adds something called other comprehensive income, which is mainly unrealized gains or losses on available for sale securities. In Mercer's case, it's a loss because the bonds they hold are worth less now. Altogether, there is a loss of $7,682. Adding that to the net income, the total comprehensive income is $43,049, which is way down compared to last year's of $100,500 and $597. One key part of the changes in shareholders' equity is the repurchase of common stock, a large move to buy back approximately 17,000 stocks. They provide a summary of all their accounting policies in the notes to the consolidated financial statements. That is to be expected. Service fees from customer deposits and income from banking-owned life insurance are major non-interest income drivers. Interest from home loan bank loans are pretty considerable and something to watch. They have approximately $8 million in debt securities from US Gov agencies, mortgage-backed securities, and state divisions that are in a loss position. Non-performing asset ratio is around 0.6%, which is in a relatively healthy range. However, they mentioned that they don't think that the asset declines in value is credit related, so that their loss estimate might be a bit off. In terms of the earning per share, both were not considerably diluted because they don't have significant options dilution. If that went up substantially compared to income, you should be wary. To close out the report analysis, there's discussion about commitments and risks, loan originating and guarantees. It seems like that nothing has been happened since the reporting to impact their capital, so overall, not bad. Okay, so now let's look at the big picture. What's my take on Mercer Bancorp after going through this filing? They're operating in a tough environment with shrinking profit margins. The decline in earnings per share is concerning. The need for that provision in credit losses highlights some challenges in their loan portfolio. There is an anticipation that a good chunk of money might not come back. On the bright side, they have been trying to attract more deposits. I will be curious to see if they grow their customer deposit base next quarter. Now for risks, definitely that dip in asset quality should be watched carefully. Also, keep an eye on how rising expenses are eating into their earnings. Alright, that's our breakdown of Mercer Bancorp's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. And if you want to talk more about this, don't forget to check out the Discord in the description. Thanks for watching, see you next time.